Hey everyone, this is going to be part 2 of donations tax. You can hear some dogs barking in the background. That's what happens when you record from home. And yeah, let's get going. So, let me do this. There you go. Now, we left off with donations tax, and where we find ourselves, let me go back here. We just finished talking about, firstly, well, what is a donation? We then said certain circumstances in which a person is deemed to make a donation. And now we're going to look at what happens when you are married. Now, if you're married in community of property, any assets that are part of the joint estate, that means assets that you share, when there's a donation, you are deemed to make that donation in half, okay, in equal shares. If the asset is excluded from the joint estate, what I mean by that, probably some asset that you had before you got married, it's only the spouse, which is making the donation, that is making the donation. If you're married out of community of property, okay, each spouse makes donations on their own. You can see the cute pictures here. In community of property, everything's in half. Out of community of property, you make them each on your own. Okay. Definition of a spouse: any person who's in a marriage or a customary union, any union recognized in accordance with their religion. What that means, if you're married under religious rights but not necessarily in the eyes of the court, that still counts, as well as any same-sex or heterosexual union which SARS is happy with is of a permanent nature. What this means, if you have been living together in a way that counts as husband and wife, or either way, and you're sharing finances, those kind of things, even if you're not married, SARS may deem it to be a spouse. Okay. Cool. Now we've looked at what donations are. Now we need to look and see, well, are there any kinds of donations that are not going to get donations tax? Make it bigger quickly. What this means is that all these things are still donations. They still fall within the subject, but there are certain things that SARS doesn't want to, or just, in the case of fairness, doesn't seem right to levy donations tax on. So what's going to follow here is a list of transactions that, if they meet certain requirements, are not going to be subject to this 20% donations tax. Most of them should make sense, so let's start off at the top here. Section 56(1)(a). Any donation made to a spouse under an antenuptial contract. What that means, when you get married, you may get married under an antenuptial contract, which says that one spouse needs to give an asset to the other spouse, often a house, a car, something like that. Any asset that is transferred in that way, not subject to donations tax. By the same token, any donation to a spouse, provided you're not separated, so you're still married to, is not going to be subject to donations tax. It is an exemption. So any transfers between spouses, no donations tax. Note that only says spouse, it does not say family, so a donation to your child does still attract donations tax. Any donation mortis causa. Now mortis, maybe you can pick it up from Latin, means death. Causa means cause. So any donation caused by death. What this means, if you make a donation and you say, hey, this donation only happens when I die, that's not going to have to be subject to donations tax now. What will actually happen? It'll be subject to estate duty later on. So you can't tell someone, hey, you can have this when I die, and expect to, escape both. What's going to happen here is it's not going to be subject to donations tax, but it will still probably be subject to estate duty. So if you say to somebody, you can have this when I die, it's not going to be subject to donations tax because you haven't died yet. Very similar to C is D, where the donee will not get the benefit until the death of the donor. Okay, C and D work very similar to each other. One is a set donation in terms of death, and the other one is like if you say to your brother or your sister, hey, you can have my PlayStation when I die, that will probably fall under D. All right, so they're not going to get the benefit until you die. Sounds very morbid, I know, but it's just what we need to talk about. E, any donation that you make that you cancel within 6 months is also not going to be subject to donations tax. Now, straight away, you need to stop and think about, hey, this could cause some problems because donations tax is payable by the end of the month after the donation. So you may have a situation whereby you make a donation, you pay the donations tax, and you cancel it, say, after 3 or 4 months. In that scenario, you're going to have to fight with SARS to get that money back. Reason behind this is probably because what a lot of people might try and do is say, well, hey, I'll make the donation, I'll cancel it after just before 6 months, then I'll make it again, and every 6 months I'll cancel it. Cool, but you're going to have to explain that to SARS why you're doing it, and you're going to have to pay the money after 2 months every time. Okay. F you can ignore, not in the syllabus, but it is a donation to, if I remember right, any kind of tribal authority or any kind of, how do you say, fund that overlooks certain communities. G, the donation of property outside of the Republic acquired by the donor. So what we're looking for here is property not in South Africa, and the donor got this property before they became resident, or got it as inheritance or a donation from a non-resident, or they purchased it from the funds of the above two. So what this means, you have a house in the USA, you bought it before you moved to South Africa, now you are South African resident when you donate it, not subject to donations tax, because you had it before you became residents. Or your rich aunt or uncle somewhere overseas, let's say England, donates a piece of property in England to you, that is not going to be subject to donations tax when you get rid of it. At the same time, let's say they instead donate you money, and you use that money to buy property outside of South Africa, then it's not going to be subject to donations tax when you dispose of it. Okay. This list continues. There we go. Any donation made to a PBO is not subject to donations tax. So if you qualify for the Section 18A deduction, you're not also going to have to pay donations tax. You get the 18A deduction, and it's exempt for donations tax purposes, so there's not a 20%. Can you imagine if you had to pay 20%? No one's going to be donating anything. Okay. Any kind of voluntary award where the value has to be included in the gross income of the donee. What this is saying is if you give something to someone and the other person has to include it in their gross income, either in terms of para C for services rendered or any of the other gross income paragraphs, for example, the one for fringe benefits, in that case, for you, it's not going to have donations tax because the other person is sticking it into their gross income. In the next one, any disposals by a trust. Now, what this means, you're going to later on in the year look at how we do taxation of trusts. And what this is talking about is when the trust actually gets rid of the stuff in the trust. So an example of this, just to try and make it as relevant as I can, let's say perhaps your studies are funded through educational trust or something like that. When the trust gives you the money or pays your fees, that is technically a donation by the trust to you because you're not giving them anything in return. For the trust itself, there'll be no donations tax because it's, a donation in terms of what the trust is set up to do. Okay. Perfect. Then you can ignore M. Any donation made by a public company is not going to be subject to donations tax. Public companies, listed companies, all right. Why can we have this? Well, a listed company is not going to be able to make any dodgy donations because it's going to be subject to its shareholders. It has to act in the best interest at all times. So it's assumed that it's not going to be able to just, give dodgy donations to family members or anything like that. O you can ignore, and R speaks about intergroup donations where both companies are resident. So if one South African company donates something to another South African company, there's not going to be any donations tax. Awesome. Yeah, every time I change the screen, I have to go back here. Now, that was the specific deductions. If something doesn't hit one of those specific deductions, we still have a second option. And that second option is found in section 56.2, the general exemptions. I said deductions instead of exemptions, but you know what I mean. The format that these take If you are a non-natural person, i.e. a company, it is 10,000 Rand per annum, and it must be casual gifts, which means it needs to be just, small things that you're giving. If you are, helping staff members with their kids' soccer team or something like that, that's fine. That's not going to have donations tax, up to 10,000 Rand a year. Just remember, if you're a public company, you're not going to have donations tax anyway. But if you're a private company, then you got this 10,000 Rand per annum. If you're a natural person, this 10,000 becomes 100,000. So each person is allowed to donate 100,000 a year and not be subject to donations tax. This is why when you give birthday presents to your friends or family or any small things like that, we don't ever have to worry about donations tax. It's why none of us are in jail if we've ever given a birthday present. So anything not covered by specific is then subject to general, and general is 100,000 Rand per year. The key things, they apply in the order of any donations that you make. So the 100,000 applies to your first 100,000 of donations in the year that are not subject to specific exemptions. If your year of assessment is less than 12 months, you have to apportion it. Now stop and think when you might have a year of assessment less than 12 months. That's going to be when you are born, when you die, or when you become insolvent. Switching residency, switching jobs doesn't change the year of assessment. Okay, but remember, switching residency could affect whether something is subject to donations tax. Then once we finished with A and B, we come down to C, and C is a very interesting one. It's another general exemption, so after we've looked at the specifics. And what it says is any contributions made for bona fide maintenance of any person, and in brackets, as the commissioner deems reasonable. I'm going to make myself big here again. What this is basically saying, any money given to anybody for the purposes of maintenance is not going to be subject to donations tax. Now, what maintenance is what's the question. So, if you buy food for your family, if you're at varsity and your parents give you money for food or rent or something like that, that's pretty clearly going to be maintenance. If you're buying food for another family member somewhere else, or basic goods or clothes, maintenance. It gets a bit murky when we get to other things. What about giving somebody a house? Probably not maintenance, because you don't have to give them the house, you can just let them live in it. At the same time, what if your parents or family member buys you a car for varsity? Is that maintenance? Probably. But then what if a parent buys their child a Ferrari? Is that maintenance? The key thing here is we have to look at the word bona fide. And bona fide or bona fide means in good faith. So you're going to have to justify to SARS that the reason you were doing this was for maintenance and not to try and avoid some tax. Now, this is obviously going to be something that is subject to interpretation. And the key thing here is as the commissioner deems reasonable. So I think buying a Ferrari for a child, probably not reasonable. In any questions that I give you, I'm going to try and make it as clear as I can. So if I make it look like it's going to be maintenance, go with the fact that it's maintenance. If I say that, the parent gave their child a Ferrari or bought them a mansion somewhere, go with the fact that it's not. Be guided by the information that I give you. Okay. In real life as well, I had this apply a little bit because I had a family member who had their parents moved down to stay with them, and another family member gave them money in order to build onto their house so that the parents could stay there. And the question we had to look at and say, well, is this going to be maintenance or not? And basically, we were a bit worried that SARS was going to say, well, that's not maintenance. You're improving the house. You don't have to keep the parents there. So what we did was we actually just changed it and said we'll give 100,000 a year, and therefore it will be exempt. But it did come with a lot of issues. Now, the specifics, we're probably not going to get into huge depth, but you do need to know anything that counts as maintenance is not going to be subject to donations tax. I wanted to hold this into 2 parts, but it looks like we're going to have to go into 3, or we're definitely going to have to go into 3, maybe even 4, because we're hitting the 15-minute time frame. But actually, I think it's quite nice because it means you can take a break after each one. I'll see you in the next part.